The Federal Reserve kept its interest rate unchanged on Wednesday, as widely expected, for a third consecutive meeting, but still kept the door open for a further hike. On the other hand, Fed members said they expect more rate cuts next year than they expected in September. The ECB also left interest rates unchanged, and the market responded positively, betting on the probable reduction in rates in the first months of 2024. So what are Jerome Powell's stock market predictions in 2024? Federal Reserve Chair Jerome Powell is pushing back against growing bets on interest rate cuts, believing it is too early to tell when policy might ease, and further tightening could take hold if it becomes appropriate. So, are we certain that this is the beginning of a new bull market phase? Are we sure that things are going so well? Follow the video until the end, and you will find out what awaits us in the stock market in 2024. But before starting, remember to subscribe to the channel and activate the bell to stay updated on new videos. Thanks for your help. Indeed, Jerome Powell was not so optimistic and still reserved the possibility of intervening on rates, or in any case, not thinking of starting to lower them as soon as the market thinks today. Powell reiterated that the Fed is proceeding with caution as the risks of excessive tightening are becoming more balanced. In other words, he wants the incoming data to show what the best path forward will be. The slowdown in inflation is encouraging, he said, but it would be premature to conclude that it is on track to reach the 2% target. These are the Jerome Powell's predictions in 2024. The American economy is actually showing clear signs of a slowdown. Today, the fight against inflation seems to be starting to bear fruit, managing to contain the increase, but we are far from the objective of bringing it back to 2% so quickly. Central banks will be very cautious and will probably leave rates unchanged at the next meeting while waiting for new signals from the economic world that could contribute to reducing rates. A very important factor to keep an eye on is the price of oil and therefore energy in general. If oil does not fall in step with inflation, it will lead banks to delay reducing rates because it would lead to a new rise in inflation. Oil at higher rising prices means an increase in the cost of energy for companies and of fuel both for people and for the movement of goods. And all this would impact on the costs and therefore on the prices of the products, triggering once again the increase in inflation. Today, after a very rapid increase in rates in recent months and having stabilized the economic situation, the banks do not intend to change course too quickly. Mindful of the past where a rapid fall in rates in an unresolved economic situation once again led to serious crises. High interest rates allow banks some room for maneuver if necessary, so lowering them too quickly today would be too risky. So what should we expect for 2024? Do you think that Jerome Powell's stock market predictions are right? In your opinion, will interest rates be cut to boost stock markets, or will they remain stable for months to come? Let us know your opinion in the comments. It's very important for us to know what you think. Rates will probably remain stable for a few more months, and in the event of economic improvements at a global level, or any glimmers of resolutions of international crises such as the wars in Ukraine and Israel, they could trigger probable cuts. In the past, having lowered the value of money to historic lows meant that people and companies got into debt beyond their means, subsequently triggering an impressive crisis. For this reason, banks will be very cautious before starting to significantly reduce rates. This could, however, be good for the economy, because it will lead to a selection of companies capable of remaining on the market and growing despite the current situation. Another fundamental question that analysts have been asking themselves for a few months is whether this artificial intelligence revolution is just a speculative bubble that has inflated the market without real value. So it could explode, leading to a new deep market correction. In our opinion, artificial intelligence is not a bubble, but a true economic revolution that will upset the near future starting from the present, and the real companies involved in the foreground in this market could grow disproportionately, increasingly centralizing the value of the market around to them. Big tech could become super big tech, with turnover exceeding that of the GDP of many sovereign states. Artificial intelligence has opened up new horizons in many sectors and can potentially be applied to countless applications capable of improving the performance and results of countless companies in the most disparate sectors. Therefore, it will not only bring benefits to its sector, but all those companies that will be able to apply it to their business in the best way will benefit. If you like the video, then help us grow, subscribe to the channel, like and activate the bell to stay updated on new videos like this. Thank you for your support. The market is difficult to predict because it is conditioned by many factors that central banks cannot keep under control. Selecting the best companies from a financial and future perspective point of view will be fundamental. As always, it is stupid to throw yourself headlong into just one sector because in trends, less experienced investors generally end up entering the right market at the wrong time and then paying the harsh consequences. Undoubtedly, there are sectors that promise incredible increases in the future, but also potential collapses if the company has not been analyzed well. biotech, microchip, cloud, big data, cybersecurity, automotive, etc. They are all sectors projected towards the future. But this does not mean that more traditional sectors will cease to exist and grow. As we have seen in our past videos, there are leading companies in their niche sectors that have truly great potential. Just as there are AI-related companies outside the Big Seven that have everything it takes to grow without a shadow of doubt. Obviously, there will always be market corrections and market phases in which there will be an interest in creating panic sales to make selections and purchase securities at value prices. Those who have a clear strategy on value stocks will always reduce their risk considerably. Time will be the fundamental factor as always. The stock market needs time and patience and not haste. Those who invest with a long-term perspective in healthy and strong stocks will always obtain results. Follow our advice and the actions that we constantly present to you and deepen your knowledge so as to invest at the right time with the right strategy. Beware of false promises from those who claim to know what will happen to the market in the coming months. Or even worse, be wary of improvised gurus from the world of finance who want to sell you their predictions or their methods for becoming millionaires in the blink of an eye. The stock market is serious business, and your money is too important to throw away. We don't know if the Jerome Powell's stock market predictions in 2024 are right. We don't care that much because we have a right strategy. Always investigate all the information given to you by the web and never trust anyone before having verified their words with facts. See you soon, investor!